And that does it for today's market action. Again, we are looking at gains across the board. The Dow, NASDAQ, and S&P all ending the day higher. Dow up 61 points. S&P up about 0.3%. The NASDAQ up about 0.4%. In terms of the sector action, energy by far the leader with the XLE closing up 1%. Real estate and communication services not too far behind. Well, for more on the markets, let's bring in Tom Hainlin, U.S. Bank Wealth Management Global Investment Strategist. And we have Chuck Self, Tandem Wealth Chief Investment Strategist. Chuck, let me start with you, just in terms of this holding pattern that it seems like we're in here for the markets. We saw selling to start the week. Today, we're seeing some slight gains. What's your takeaway, and what are you anticipating we're going to hear at the end of the week?
Well, what we're going to hear from the Fed is that inflation is the number one enemy, the same thing we've been hearing all along. And they're going to continue to raise rates, and it's going to continue to slow down the economy. We have S&P earnings less than the $244 that the market has for 2023, and it's already trading at 17 times that $244. So we're defensively positioned.
And Tom, do you agree with
in this environment?
Oh, go ahead, Rochelle.
I was going to say, Dave, you go ahead.
All right, Tom, do you agree with that assessment? And what do you think gives this market some direction if we all really do know at this point, generally speaking, what the Fed chair is going to say?
Yeah, we're similarly defensively positioned. We still think the Federal Reserve's got a ways to go, that they're not going to call all clear on inflation. And we expect to hear at the Jackson Hole Symposium continued talk about inflation is the main concern for the Fed, and they're going to continue tightening until they get inflation down to its mandate. And you've got an incredibly strong consumer and strong business balance sheets that's making it challenging for the Fed to achieve that slowdown in demand. So we still see a pretty persistent Federal Reserve. We still think there's challenges to the earnings outlook for the rest of the second half of this year and early into 2023. So similarly, we like energies, we like defensive sectors, and we're still modestly defensively positioned.
And Chuck, some investors are hoping for a pivot from the Fed. Others are saying, you might see perhaps a 50 basis point hike, just sort of a slowdown in the rate hikes. How should people be really approaching this time right now?
Well, you got to remember that this is like 1974 when inflation was increasing and we had great top line earnings from companies, but it was masking a slower unit growth situation. The Fed is not focused on that part. And because of that, eventually when inflation comes down, when they're successful, we're going to see the earnings estimates go down and thus probably pressure in the marketplace. And so the Fed is not focused on these things, and they're going to just let their rates go up until they believe they got inflation slayed.
Tom, Bank of America was out saying that all three of their major client groups at Bank of America were net sellers of U.S. equities last week. That is the first time that we've seen that in the last 8 weeks from that group. What are you seeing from your clients?
Yeah, we moved to that more defensive positioning really earlier in the year. We started in February and again in late May. And so, we've been sitting in this positioning now for several months. We're observing the Federal Reserve, investor perceptions of the Fed, and we still think that the perception that the Fed is near a pause or perhaps even a cut from here is not necessarily that's not our viewpoint. So, again, we're not necessarily net sellers. We went more defensive earlier in the year, and we've been in this sort of mildly off equities, overweight shorter term fixed income, and really overweight an area called real assets where energy prices don't necessarily have to go up from here, but where they are right now still drives really strong cash flows really across the entire energy complex. So we like those defensive, but also those energy oriented positions here.
Chuck, what's your expectation for inflation? We'll get a fresh read on PCE Friday, the number that the Fed does often like to read into the most.
Well, inflation probably is still going to be high. It may be down a little, maybe up a little, but it's going to take a while for the Fed increases to really affect inflation. And in the meantime, economic growth is going to continue to slow. We've had about a year's worth of global short rate rises. And because of that, we're just now seeing the effect of that as far as economic growth is concerned. And we know that the Fed is going to continue to raise rates throughout the rest of this year. So it's likely we're going to continue to have slowing all the way through next year and inflation going down slowly with that.
And Tom, we've been tracking the action of the US dollar and its performance. And, a lot of people wondering, especially if you're a company with multinational exposure, what does this mean for your growth going forward? So what are you keeping an eye on when it comes to the strength of the US dollar?
Yeah, domestic inflation expectations, you noted the rise in bond yields. That's primarily due to rising inflation expectations in the longer end of the curve. So higher inflation expectations, a strong Fed, that's still dollar bullish from our perspective. And again, that certainly challenges the outlook for those multinational companies where the strong dollar that makes them less competitive in the global marketplace. But we don't see any material change in those persistent trends of the strong and persistent Federal Reserve and kind of sticky inflation expectations.
Tom, here we are today at 4140 on the S&P. I know you were saying that you're taking a defensive position here into the second half of the year. What's your S&P target for the end of the year in December?
Yeah, we're at about 40.50 on S&P 500. That's 18 times estimated 2022 earnings. We're going to get more into what 2023 looks like. So that's under review for us. But that just lets you know that again, we don't see a tremendous amount of upside here unless we get greater visibility that corporations are really able to power through the tightening monetary policy and deliver on those 2023 earnings. So that's what we're focused on as we get towards year end.
A big thank you to our market panel, Tom Hainlin and Chuck Self. Thank you for joining us this afternoon.